Time in trading. How to choose a time frame. Have you ever noticed that time is one of the most important aspects in our life? It is literally the main component. So in trading, time also plays a crucial role. What time frame you choose depends not only on your approach, but also on how you see the market. Many people understand this point, but it is the time frame that is the foundation. You probably don't think about the fact that the trends you see depend entirely on the selected time interval. That is, if you switch between time frame tabs, you will see completely different charts, different levels of support and resistance, and even different signals for opening trades. But firstly, let me tell you what is a time frame. This is the basis that you will use when making decisions, starting from setting indicators and receiving signals from them, ending with determining the figures of graphical analysis and trends by eye. Time frame is a simple tool that allows you to look at the market under a microscope or vice versa, a bird's eye view. Here, you can draw an analogy with map. On a small map, you can see the whole city, but it is different to see the details. If you zoom in, you see every street, but you lose the overall picture. Choosing the right time frame helps you see exactly the map you need. For example, if you plan to make a trade that doesn't last long, then you don't need monthly charts because it will contain too much unnecessary information. But if you're on the contrary, you want to see the general trend and direction of movement, then it is pointless to look at a minute fluctuations. Of course, timeframes, like other instruments, have different types. They can be divided in three groups. The first one is short or small. Charts with intervals of 1, 5, and 15 minutes. They show the slightest movements of the markets, opening up opportunities for quick entries and exits. Second, medium. From 1 to 4 o'clock, they filter out random fluctuations but retain sufficient details for accurate position entries. And the third, long. Daily, weekly, monthly charts show long-term market trends. Excess noise completely filtered out here, leaving only significant movements. A competent trader can combine different timeframes. For example, it looks at the daily chart to understand the overall trend, and then switches to the hourly or 5-minute chart to select an entry point. It is very important to understand that the choice of the time frame depends not only on the platform, not on chance, but on you. It depends on your temperament, how much time you have, how much you want to interact with the market. The traders who love activity, dynamics, and constant movement, they prefer shorter time frames. And there are those who appreciate regularity, calm analysis, and more rare, balanced decisions. They are more likely to work with the medium or long intervals. To make it clear to you, let's look at it in order. Short time frames. For those who love speed, decisions are made quickly, and there's almost no time for long reflections. A lot of noise and the slightest movement can be confusing. You need to filter unnecessary information. If you want to control everything and react to every movement, then this option is yours. But beginners often get carried away and start opening too many trades in a row. Because of this, focus is lost and the result becomes chaotic. Therefore, if you are just starting out, do not immediately rush into the small time frames. Average time frames balance between details and the pictures. Now imagine, if you have enabled the time frame for an hour or 4 hours, here you can see that the market is moving in a certain direction, but you don't miss local changes. This has its advantages because you can analyze the situation more calmly. It is suitable for those who are willing to devote several hours a day of trading, but do not want to sit on the chart without stopping. A good option for beginners because this is the less chaotic than the few minutes. A long time frame, strategy and patience. Daily, weekly, monthly charts are another level. They help you see global trends and understand where the market as a whole is moving. Less unnecessary noise, short fluctuations are smoothed out. You won't be able to jump in and see everything at once. Sometimes you have to wait a long time. Long time frames are suitable for those who perceive trading as a part of a strategy and not as a constant sitting on the screen. And here you may have a question. How do I figure out which time frame is right for me? But before I tell you how to choose the right time frame for yourself, I want to take a short pause and invite you to my Telegram channel There, I share additional materials that will help consolidate what we are discussing in the videos. You will find strategies, review tips on using a demo account, useful charts, and answers to common questions for beginners. There, you can ask questions, discuss your observations, and get support. Link in the description below this video. Be sure to visit. This will speed up your development in trading. But now, let's get back to the discussion. In fact, there is a specific answer. Before everything is individual, however, there are 3 factors that will influence your choice. The first is the rhythm of life. How much time do you have for trading? If you can spend an hour in the evening, then minute charts are unlikely to work for you. It's better to choose a medium or long time frame. The second is temperament. The medium or long-term timeframes are better. And if you like dynamics and want to be on the move, then try short-term ones. And the third, your experience. For beginners, I would recommend starting with hourly charts. They are less chaotic than minutes, but you don't have to wait for weeks. Speaking of beginners, many people make very common mistakes, but at the same time, gross mistakes in the first stages. For example, the shift is too frequent. Beginners often run on schedule. Today, 1 minute. Tomorrow, an hour. Then a day. This is confusion. You need to decide and work with the time frame of your system. Also, try to find the perfect time frame. It doesn't exist. It's like looking for the perfect time of day to exercise. The main thing is regularity and habit. Finally, ignore the higher time frames. Many people look only at small charts and think this is enough. But without a big picture, your decisions will be random. So friends, let's sum up. We have analyzed what a time frame is and why it is the basis of your understanding of the market. You saw how to choose the right intervals to see the whole market, filter and unnecessary fluctuations, and make decisions calmly. Time frame is your tool for analysis. From setting indicators to understanding trends and patterns on the chart, we look at 3 groups of timeframes: short for quick responses and dynamics, medium for balance between details and big picture, and long for strategic approach and patience. You have realized that a competent trader can combine different intervals: the senior one for the general trend, the middle one for clarification, and junior one for accurate entry. But the main thing is that the choice of time frame depends only on you, your rhythm of life, temperament, and experience. Beginners are most often recommended to start with hourly charts because this is less chaotic, and you can safely observe the market. We discuss the most common mistakes of beginners: changing timeframes too often, searching for the perfect interval, and ignoring all the charts. By avoiding these pitfalls, you can work systematically and confidently. If you want to consolidate material and speed up your training, I invite you to my Telegram channel. There, you will find analysis, strategies, examples of working with training accounts, useful graphs, and answers to questions from beginners. Link to the channel in the description under this video. Come and use this tool for your development. Time frame is not just numbers on the chart. It is your coordinate system, your reference point, your key to understanding the market. Regularly analyze, try, record results, and build your individual approach. And then, working with the markets will become cautious and decisions will be confident. Thank you for watching this video to the end. See you soon.